Hi there, I'm Champion Trader Kevin Davey, and in today's Algo trading test, I'm going to take a look at part 2 of my quick exit test. So let's get started. Okay, so today I'm going to talk about the follow-up to an earlier video I did about quick exits. I've written a full article with a lot more information on my website. You should go and read it, but this video will just kind of summarize what I came up with. If you watched the first video, the whole idea behind a quick exit is when you have a volatility type price spike like you did in early March in crude oil, where the price just skyrocketed on a Sunday night in the first couple minutes. The idea is that might be a good time to get out because it's kind of like a jackpot, kind of just a bonus type situation where you don't expect the market to like jump like that. And when it does, that might be a good time just to take your money and go home. That's the idea. Okay. So in the earlier video, I did it with average true range using quick exit. Now I'm going to do a dollar-based one because the average true range one, you can watch the video, it didn't work out too good. So what I do here is when the close of the previous bar plus a certain dollar amount, when you convert it to points, when today's close or this bar's close is greater than those combination values of the previous close plus that dollar amount, then you get out. If it's less than, you do short trading, you're going to buy to cover. So basically, when you get a windfall profit, either direction, you're going to exit. And I'm measuring that with a dollar base amount. Okay. So that's just the exit. And again, just like in the first test, 54 markets, 6 bar sizes, 8 different entries that go from breakout, momentum, moving average, RSI, and then I did the reverse of them, which were kind of like counter trend trades. 155,000 back tests in this test. I'm looking at 3 different performance metrics. I'm looking at net profit, which is always important, profit to max drawdown, and return to drawdown. Now, some people will say, hey, what really matters is drawdown. Net profit doesn't matter. I don't really think that's true. If you want zero drawdown, if that's your goal, you never trade. Or you make one trade and that happens to be a winner and you had no drawdown, right? So that wouldn't be something you'd want to trade because maybe it made $1,000 in 20 years. Oh, but you had no drawdown. That's silly. You want good net profit. Also, you want a good risk-adjusted return. And 2 ways to measure that, and they're pretty similar, but they're not the same, are profit to max drawdown and also a Monte Carlo simulation that gives you the return to drawdown. So I'm looking at all 3 of those performance metrics. What I'm doing with this test is just rating them based on how good they are. 1 to 6, 1 being the best, 6 being the worst for each case. And you'll see that in a second. I'm using multi-op software, which is special software written specifically for TradeStation, and it's only available to students of my class. So you can't get it anywhere else. If you try to buy it, you won't be able to. You have to take my class to get access to this software, and it is amazing software. All right, so let's look at the results. The column on the left are different dollar exits from 0 to 2,500. I should mention that the $0 exit is not really a dollar amount. It means that there is no exit. Okay, if you go back, let's back up to the code. Let's see. Here it is. I'm only activating these exit orders if this input variable, which is the dollar amount, if it's greater than 0, then these 2 become active. If it's equal to 0, these 2 statements never get used. So That's why that 0 value is there. It bypasses all those exits. Okay, so I rate them 1 to 6. This is just an example with one entry number 1 with the average net profit. In this case, the big dollar amount, $2,500, was the best, and $500 was the worst. And not having an exit was number 3. It was the third best, although 1, 2, and 3 are all pretty close when you look at the averages. That's just an example. Here's the results when you look at everything all together: the best exit, the second best exit, and the worst exit. Okay, so I just summarized all this data for you, and I looked at it versus each entry. So I treated each entry as a different potential winner or loser. And you can see most of the time the best dollar exit is either no exit or a really big one, $2,500. Maybe if I had used an even bigger exit, it would have worked even better. Now, you know, the thing about dollar exits, they don't really work the same for each market, right? A $2,500 exit, profit exit in crude oil, especially nowadays, is a whole lot different than a $2,500 exit in lean hogs or live cattle, because those markets don't move as much typically. So, you know, the dollar exit, you kind of think, well, does it really make sense? And, you know, that's why a lot of people use the average true range. But these are the results with the dollar exit. So you can see that in almost every single case, the first or the second, so the best or second best exit was always, almost always, no exit or the $2,500. And the worst exit was always $500. So that's telling me, hey, if you just try to get out when you get small profit spikes, that's just not a viable strategy. So you want to let profits run, is what that's telling you. And that kind of matches the old adage, you know, let your profits run, cut your losses short. So the conclusion, hey, $2,500 exit is a bit better than no exit at all. Not really a huge difference, but it is better. And the small dollar exits are really bad, so avoid those. That's the other key. Okay, so what can you do with this? What's next? What's your next step here? Well, just remember, whatever you test, you have to test. You know, don't rely on me. Oh, well, Kevin said it was $2,500, so then I'm never going to test it again. Don't do that. Say, hey, Kevin said this, or somebody else said this, but I'm going to test it and see for myself. That's the real way you prove things. And most good traders want to prove things to themselves. They're not going to take somebody else's word for something. I should also add, most ideas I have do not stand up to testing. So this whole idea, the first video and second video, I said quick exits might be really cool. The ATRs, no, they don't work. This one, maybe the idea is okay, but certainly not what I was expecting. I was hoping and expecting something a lot better with this quick exit. Did not see it. But that's why you test. And, you know, the other reason you test is you can think of algo trading as this rat race. You have to continuously try to up your game, try to test new things just to keep up. You know, maybe 15 years ago, if you had a real simple system and you could probably trade it for 5 years and it would work. Nowadays, hey, if you're still trading a system after 5 years, that's pretty unique. Systems come and go and they stop working. And a lot of it, you know, you got thousands probably of algo traders out there who are testing. And if you're not testing, they are, and they're going to find stuff and they're going to beat you. So you got to keep testing. So remember that. Okay, if you like this video, please give it a thumbs up. Please subscribe to my channel if you haven't already, and leave a comment. I always want to hear what people are thinking. Thanks for watching.